So, ladies and gentlemen, welcome to day 2 of bauma, and it's a little bit warmer outside, but I'm glad you've come inside to enjoy our second Inside Edge panel discussion of the event, and I'm very pleased to say that this one is all about, as we see, supply and demand trends for construction and equipment. And fortunately, we are guested today with 3 experts in the field who are going to talk to us. And I'll introduce themselves, but I'll quickly introduce them to you. We have Chris Slight, MD for Off-Highway Research, Riccardo Viaggi, Secretary General of the Committee of European and Construction, and Phil Mouse, who is MD of Rouse Analytics. But I'll let them introduce themselves and tell us a little bit about their business, and then let's get to the subject matter, gentlemen, of what is a really critical thing right now as we move forward and try and get ourselves back into the area where everybody said pre-pandemic to where we are in an industry. Chris, I'm going to start with you. Please introduce yourself, tell us a little bit about yourself, and also your role with Off-Highway Research.
Thank you, Peter. Yeah, good afternoon, everyone. My name's Chris Slight. I'm the Managing Director of Off-Highway Research. Very happy to be neighbours with Ritchie Bros here at bauma. Off-Highway Research is a market research and forecasting company which specialises in the construction equipment world. So we're right at home here at bauma.
And Chris, one of the things I'd like you to kick us off with really is, the name's in the title really, research, and the sector in itself right in the heart of bauma where we are now. I'd like to ask you first of all, have there been any particular challenges and trends in the market that you've seen from a demand perspective from 2021 to where we are today at the end of sort of 2022?
Yeah, for sure. I mean, from when the pandemic struck in 2020, construction was fortunate in that it could come back. Even in the worst of those pandemic years, construction work could go on. And then with all the stimulus of low interest rates that was happening around the world, really since mid-2020, demand for construction equipment has been red hot. Yeah. Record volume of machines were sold in 2021, an absolutely unprecedented number. And so the demand is there. The problem that I think pretty much every stallholder at bauma would tell you is we just can't get enough stuff to sell. We speak to OEMs and we speak to distributors as Off-Highway Research, and the consistent message is, I've had a great year, it could have been 5-10% better if I just had the machines to sell.
And we've also seen a bit of an element with the chip shortage as well, which has come into play. Has that impacted as we move through to 2022 and things like that?
Yeah, I mean, there are all sorts of component shortages out there in the world, and semiconductors is obviously something which spreads across not just our industry, but also the very obvious things, and you see it if you've tried to buy a laptop in the last 2 years, what the prices are like for them. Some of that is COVID related. I think a lot of the shipping problems, for example, are very clearly COVID related. But the shortage of semiconductors was kind of brewing before COVID, and COVID was the match that lit the firework. So I feel that that's something we're going to live with for many years. It's not something that just gets better when the world comes out of COVID. There's some more fundamental structural things about the capacity to build these components or manufacture these components in the world that was brewing for some time before. So I think scarcity, component supply issues are not going to go away when we're back to whatever normal looks like.
Yeah, and the new normal is going to be very different when we look outside in bauma and see different machines and different types of machines. Riccardo, your members are at the heart of this industry, and I think what's really exciting about your role is you see it from a looking down perspective, and the feedback that you get from your members is crucially important as well. Tell me a little bit about your role and the organisation and how it's founded and what it actually does.
Yeah. So CEC is the European Association representing construction equipment manufacturers. So our members are the OEMs that make the machines, but also down to the supply, some of the supply components that go into the machine. What is interesting is that our members are not only the household names that do the very famous earth-moving machines, but very much in all the other sectors, tower cranes manufacturers, concrete pumps, all the hydraulic attachments that go on excavators, and of course very much the road building equipment. So all the companies you see here are members of CC, directly or indirectly. And what we do is basically we are a Brussels-based organization, so we are where the EU makes regulations. So our main mission is to be a lobbying organization, many would say. So we advocate on behalf of the organization for what the regulation needs to tackle when it comes to problems, when it comes to innovation. So in that sense, we are the representative body of the industry. We do not only do public affairs and advocacy, we also are the owner of the statistics data that our members share with us. So we organize a statistic data collection system. We do a lot of communication activities. We organize events. We organize training and webinars for our members and for the public. So basically, yeah, we are the representative voice of the construction equipment value chain.
Sounds like you're very busy and your team are very busy, and it's those statistics that are really important, Ricardo. I'd like you to tell me a little bit about the things that you've seen from the supply chain perspective, and also the fact that we're moving, as we've seen at bauma, everything seems to be either electric, we're hinting at hydrogen, we're seeing stage 5 engines and things like that come through. Tell us about what your members have been doing and also where you're seeing the supply chain moving forward.
Yeah, so our members, as many other companies in other industries, have been having lots of issues with the supply chain. There's no hiding that. Every month we gauge the sentiment of our members. So we send out a survey to our members. We call it the barometer, the business barometer. And for since the end of 2021, supply side issues were the main concern, that everybody identified, a vast majority of companies have identified. So this indeed, as Chris said, is the problem that made the companies have very long order books, basically because they couldn't deliver the machine, they couldn't sell the machines, they couldn't place them on the market. Chips, engines, hydraulic components, those have really been the ones that were missing. From very basic to more complex components, they were simply missing. So on the one end, 2021 has been a very, very good year. We have almost completely recovered from the 2020 dip. Our members have. The data shows that. But then early 2022, of course, the Russian invasion of Ukraine has brought even more destabilization. At the very end of this year, a couple of months ago, it flipped a little bit where we see supply side concerns be replaced by general economic conditions concern, most of all because of the tensions in Ukraine with the behavior of Russia and all the impacts that this has. When it comes to the green and digital transition, which we sometimes call the twin transitions because they do go hand in hand, it's definitely what you see outside and in the halls, which makes certain supply side concerns even more burdensome, even more hurtsome, because when you want to build battery powered excavators, you have to go into a value chain, a supply chain, which is even stricter, with products even more expensive, with other industries which definitely have a first, let's say, a first priority. I think about cars. I mean, they are much more advanced in electrification than we are. So that's only creating potentially additional problems.
And Phil, that's where you come in nicely, because Phil, you're the MD of Rouse Analytics. So explain what Rouse is as a business and what you've been trying to do. Again, you've been coming into the European market with your services that are starting off in the sort of US-Canada space. Tell me a little bit about yourself and the Rouse business, and then we'll talk a little bit more about what you're seeing.
Sure, Peter. We work with about 300 rental companies and dealers across North America, the UK, Australia, and Japan to help them understand their hire rates, utilization, and also equipment values. So we get nightly updates on a little over $70 billion of fleet on an OEC basis. We get about 40 fields of information on every piece of equipment, so we know the make, model, spec, serial number, numbers of hours of usage, most importantly, whether it was out on rent that day at work. We also get every rental invoice our customers write, about 30 billion annually that we're collecting, and every equipment sale, so about 22 billion of equipment sale activities. We bring all this information in, cleanse it, standardize it, and use it to help our customers understand at a local market level how their pricing compares to industry benchmarks, how their utilization compares to their competitors, and also how equipment values are trending over time. What is their fleet worth today versus what was it worth a year ago, and what would it be worth 1, 2, 3, 4 years from now in various economic scenarios.
And I think what's interesting about your data and what's interesting about how you operate is those are real decision-making opportunities when that data comes through on a daily basis. So we're looking at our assets, we're looking at what the value is, and we're looking at when we might dispose or when we might even invest in new assets as well. But that financial circle about how everything's moving around. You obviously must have seen some serious trending data as we went through the pandemic, and then 2021, second-hand equipment and young equipment went through the roof. In fact, I know of big plant hirers that spent more on a used piece of equipment than they did on what they were ordering as a new piece of equipment. So that was something that was happening. The market was all mixed up. What are we actually seeing now from the trending data you're seeing about the market supply and demand?
Yeah, sure. We saw, during COVID, a big drop off first in utilization and then in equipment values. Now that turned right around the summer of 2020. Since then, we've seen things accelerate upwards. Equipment values have come up about 30%. They've plateaued more recently. Auction values have sort of plateaued. Retail is still ticking a little bit higher. And really it's a result of, I think, a very high level of demand against a low level of supply. When we look at equipment disposals out of rental fleets, year to date we're trending about 20% below where we were last year. And that's really because our customers can't get enough new equipment to replace the old equipment they want to sell out of their fleet. Their fleets are older than they were pre-pandemic. Typical customer has added anywhere from 8 to 10 months to their average fleet age since February of 2020. So they've got a lot of gear that they're looking to sell, but it's out on hire, so they can't sell it.
Yeah, absolutely. And I think, Chris, that comes to the point of when we're looking at this whole marketplace, where the trends are going to be. And you've done a lot of work in the telehandler market in particular. So, where the data is that you're seeing and what's happening in that particular sector is a bit of a barometer for the rest of the industry, particularly as we look at different market sectors, isn't it?
Yeah, I mean, we cover about 19 different types of construction equipment at Off-Highway Research, and the more sort of mainstream earth-moving, handling and road-building machines. And you see different things driving each one, kind of depending on what the application is and who the users are. Telehandlers are quite an interesting piece of construction equipment because they're also used very extensively in agriculture. So for each different machine type, you see different things driving them. So telehandlers are not just what's going on in house building, it's also what's going on in farm incomes, which of course links to commodity prices. So it's one of those things where the further you dive into it, the less you can generalize, because there are little nuances with each machine type that drive a slightly different trend. I mean, another obvious point to make is the way interest rates are rising around the world obviously hits house building quite quickly, and that feeds in also quite quickly to demand for compact equipment. So in Europe that would include some telehandlers, but it's mini excavators. In North America it's compact track loaders and things like that. So to kind of understand what's happening and what will happen in the marketplace, it's quite important to understand what underpins each different equipment type and what's happening with each of them.
Yeah, absolutely. And I think what we're seeing in the marketplace right now is people looking at what's coming down the line. But as you mentioned, Phil there, people are saying, I can't get rid of this because it's on hire. But for your members, Ricardo, obviously there's a challenge there because they're making equipment, they've got to sell it, and they've got that whole system has got to work from the start of the new equipment coming into the market to the disposal to second to third life of the equipment all the way down that chain. What are you seeing in ways in which your members are responding to this?
Well, what they're trying to do is, of course, to first of all to make those first machines, new machines, available, and that's the first concern we talked about before. Because what they see is that demand is very much there. Certainly in Europe, the demand side is still quite strong. There are still important incentives in certain countries to buy, renew fleet. There are investment projects. Some of them are publicly supported by the Next Generation EU funding from the European Commission. What is also clear is that other markets are very much, even outside of Europe, are very much going ahead. So it's they're entering to force of stage 5. That definitely was the right moment to be able to bring out a lot of new machines, and that hasn't unfortunately happened. Some members try to find the positive in everything. They tell me, well, if I cannot make new machines available in 3 or 4 months, it means that I have order books longer for 6 or 9 months. It's, of course, trying to really find the good side in everything, because other than that, there is no real possibility for our members to make new deals. And then when they're asked for bids, they really have to say, this machine will only be available in 12 months. I mean, we're talking about larger machines because, again, other sectors I haven't mentioned. Mining is very strong, and there are, let's say, also realization by the EU that critical raw materials we cannot trust any longer some of the old-time partners that we had, and so we have to start mining again in Europe. And so mining is strong in Europe and elsewhere. So. The demand side is there. On the supply side, also our members are entering, have always been there, but even more strongly the second life market, and because they know that there are the deals to be made there. It's a little bit different when you're a machine builder. You want to sell new machines. Also because you have invested hundreds of millions of euro in going to stage 5 compliance, for example, in making connected machines, in making semi-autonomous machines, and then your clients have to deal with older machines that they would want to dispose of, and they cannot because otherwise job sites do not go ahead.
And Phil, when you're talking about, you've mentioned earlier things are sort of flattening out a bit. There is the data that you've got is coming in every day, and you can see, therefore, by that data, where the market is turning, and even where a sector or individual, like Chris just said, an individual market segment like a telehandler or a specific mini excavator sector. When should people really pay attention to this data? Because they've got to make decisions to get the best value out of that asset when they move it on, but also to recognize that, hey, if I move it on too quickly, then I'm going to have to rebuy it in. And so what are the types of things that people can do with the Rouse data to make those fleet decisions and to make those longer term decisions about how to run a business?
Yeah, I think it's an interesting question. There's a lot of questions we help our customers answer. There's really the rental revenue management component, which is about understanding how am I priced relative to my competitors, what's my trade-off between price and utilization, am I taking or losing rental market share, and that's really about sort of optimizing your rental business, understanding it, are you performing the way you want to perform. But the larger asset management question, I think there are some other variables that come into play. As you mentioned, what is this piece worth today? What's it going to be worth a year from now? How has the market been trending? Are we really going to stay at these used pricing levels? Probably not. I think the trade-off for any rental company is they're always very reluctant to lose a rental because the rental income stream is a huge part of their profit over the course of the life of a machine. So if they've got an asset that's out on hire, are they really going to go take it back from the customer and sell it? That's very unlikely, even though we have historically high levels of used equipment pricing. What'll be really interesting here, I think, as we head into the fourth quarter, this is normally a time of year when a lot of equipment comes back off hire,
Yep.
and our customers dispose of a lot of plant. Now, what we saw last year was a lot of customers actually kept the gear through the winter months because they were afraid they wouldn't be able to get it back in the spring.
Yeah, and that is an issue, isn't it? You know, but there's certain things that people are being smart about, and actually buying equipment for the job.
Right.
You know, and then disposing of it afterwards. And again, that's more of a shorter period for looking about that value, because again, I knew some people within the pandemic that had to buy used equipment. They bought it, and they did it. They used it for 6 months, and they sold it for more than they actually bought it
Sure.
for.
Yeah.
You know, at that
Yeah.
particular time. But again, it's those decision-making processes that are really important, isn't it?
Yeah, and what we do is help our customers stay stitched into the market so they can understand what's the value, what's happening to supply and demand, utilization rates, all the different factors they would want to think about to determine what they want to buy more of and what they might want to sell.
Now, Chris, what's really interesting about that is we are seeing a change in machines right now. So we talk about, Ricardo, you mentioned the Stage 5 coming in. The Stage 5 engines need to be worked hard to actually perform the best they can for the drop of fuel. But what they're doing is they're actually becoming more powerful. So it makes a smaller machine a more powerful machine. And so when you've got a rental fleet like you've been talking about there, Phil, and you buy the wrong type of equipment, Chris, that's a big problem, because the demand levels, are you seeing that they're changing? Are we seeing that people are buying smaller equipment because it can do the job better, or because it's got the hydraulic capability, or what are we seeing there? You know, that swing in, though it's always been 20 ton, it might not be the case anymore, is it?
Yeah, I think you're seeing, you know, the classic piece of rental equipment would be the mini excavator, and people have a different definition, but from our point of view, we call a mini excavator anything up to 6 metric tons. And I think what you're seeing is, you're certainly seeing growth in Europe in mini excavator sales, and also in North America. And what seems to be happening is exactly what you said there, Peter, is that whereas previously someone might have been looking at a relatively large 8-10 ton machine, they're finding that the 6 ton machine can kind of do the job. So when you look at it from the point of view of our data and our definitions, you are seeing a lot of growth in compact machines, but they're not necessarily doing those compact machine jobs like just digging a small foundation. They're doing sort of more serious earth moving now.
And Ricardo, yeah, I was going to say, yeah.
What we see is this happening more on mature markets, where the job site gets more specialized. The operator is often more specialized. So it's not really about, let's say, downsizing the machine because you don't need, it's because you're specializing the machine for a special job. And it's something that we as manufacturers really welcome, because we know that's how you gain efficiency on job sites. Is by really using the 6 ton excavator for a 6 ton excavator job.
Yeah.
And it's not to be using a 25 ton excavator as a telehandler to move stuff around. It's really, I mean, yeah, we really
see it
do.
happen. We see it happen.
Yeah. So, and that's also part of our story on how we decarbonize this industry.
Yeah.
It's by really using the right type of equipment. We call it the 4-pillar approach, because to a machine, let's say, to decarbonization of the construction value chain, there are 4 main elements. And the way the machine is designed is only one of them. The way the job site is designed, the way the machine is operated, and the way you can select alternative energy sources are the 3 other elements. So for us, it's not just about Stage 5 becoming more powerful, it's about contractors specializing on special jobs, most of all in mature markets, of course, Europe, the US, and then buying the right or renting the right type of equipment.
And what's really interesting about that is I've just literally came from Hitachi to this panel, and they've actually integrated 3D machine control from the factory from like a Geosystems. So you're saying from the factory that is Leica ready for 3 and 2D machine control for those connected work sites you're talking about.
Absolutely.
And then again, I've noticed there's a new system come out I've reported on yesterday, which is for 2D for compact equipment and 3D for compact equipment, because the value chain comes all the way down. If you can do something faster for less fuel, and you can say, we're going to charge you per plot for doing that, well, you make more money because you do 5 plots instead of 3.
Right.
So the fundamental is that you're adding value there into the actual equipment and the asset from the day one. You can plug and play, put the model in, and off you go. Chris?
What I would say about that is, there's obviously an awful lot that you can do with technology, and it also gets very interesting when you look at the way buildings are designed in BIM models, and you can kind of see almost the connection from the architect's office to the bucket digging the hole in the ground. And it's mind-blowing technology, but it's very, very hard to get the full construction supply chain to adopt that, because it's such a fragmented industry. I mean, the reality is, on many sites, you've got a project manager and a main contractor and a subcontractor, and then they've got someone in to actually dig the hole in the ground. All those people have to understand the technology, know how to use it, and buy into the concept to really drive the productivity gains that are possible. And I think the reality is, it's getting there, but machine control has been on the market for 20 years, and you only really see it heavily adopted in applications like dozers and graders. And you visit a lot of construction sites, I know.
I do.
And it's very rare to see a construction site where you just think, wow, this is a model of productivity. Everyone's scurrying around like worker ants, and it's go, go, go. This person over here is stopped because that person hasn't done that thing, and there's a pipe in the ground that we didn't know about. So I think the technology can do a lot to deliver it. I think probably the thing that's holding it back is the human factor, the training and the adoption.
I totally agree with you there. We're seeing new facilities opening up. I visited one about 3 weeks ago, which looks like a 5-star hotel, because we've got to attract people into the industry to actually allow us to keep the supply and demand, because you might have machinery, but if you haven't got anybody to operate it, then you've got a serious, serious problem. But Phil, from your perspective, again, we're looking at these trends. So you're telling me that they come to the telehandler, for example. You're saying that we've got an X meter long telehandler, that's actually becoming more popular within the marketplace. So if the company goes and buys a load of smaller telehandlers, they're not going to actually get the revenue from that because people don't want them. But we're also seeing people bring in what I call over-the-wire upgrades to their machines. So Bobcat, for example, with their beast mode and things like that they can do over the wire for hirers, to have a unit that can be up-spec'd, but actually the unit itself is capable of doing that. Sure. All of these things add value. Does machine control being fitted to machine add value? I don't know. You might know that.
Yeah, no, true machine control, which we've seen on a lot, to your point, mostly graders and dozers to date, does add a lot of value to a machine, both from the standpoint of the higher rate it's able to command and its recovery in the used market. But I would say that's really only become common on newer models in the past 3 to 4 years. Really hasn't been widely adopted and is very specific to those two categories. And it's really a few OEMs that have kind of been leading the way on that front. So I wouldn't say we've seen widespread adoption, and certainly not on smaller machine sizes or really outside of dozers and graders.
So folks, what I want to do now is I want to get the guest's opinion of bauma 2022, which is where we are today. We're on day 2 of bauma. It's a huge event for all of your members, because you've basically said everybody's signed up to bauma, everybody's virtually signed up to your organization as well. Tell me about, when you're walking around, Ricardo, what are your thoughts? Why is it important that we have this show, and what is it going to deliver for the industry now as we move forward?
I always found it as, first of all, a showcase. We really show what the industry is about. So we try to maybe break down preconceptions that everything is hard, dirty, unsafe. I really find that bauma is that showcase. And when you walk around in the weekend, of course, something that is not always pleasant also happens. But you have kids who roam the corridors and the outdoor area. That's the showcase effect. That for me, as a representative of an industry association, I really find that. Then, of course, it's the deal making. Of course, if you're not here, you're not seen. So for us, bauma is one of our international partner shows. We have a program of international shows that we partner with, and bauma is the number one of that. So we want to be here. We produce content for it to be here, and after the last 3.5 years that we've missed bauma and 2 years that we were almost locked down, it's really nice to be back and see that it's almost like we were here today, yesterday, even if 3.5 years have passed.
Fantastic, and you've still got your voice, so well done. Held on to the end of the panel there. Phil, your thoughts on where we are today, surrounded by people that are enthusiastic for the industry. What does it mean to you to be here, and why is it so important for Rouse to be here at bauma?
Well, for me, it's my first bauma. I've never been before, and as a industry nerd, it's pretty cool to see all this machinery. I went and walked through the crane forest yesterday, and it's a lot bigger than anything else I've seen, even at shows in North America. So just really excited to be here. For us, we're establishing our presence in Europe, meeting with a lot of European hire companies to talk about what we do, and excited to bring that capability to the European market. And I think I've also been surprised just how many of our North American customers we've run into here as well. So a lot of people making the trip from all over the world to get together in person after all this time. It's been a lot of fun.
Good, good. And Chris, you've been in the industry for a very long time, just like myself. We won't say how long, but you know, you've been instrumental in reporting on and now supporting the industry in your role. What does it mean to be back here, and why is it so important that Off-Highway Research is here and talking to people in the industry?
Yeah, I mean, put simply, my highlight of bauma is the fact that we're here at bauma. It's a people industry, and after 2 years of interacting with people sitting on the end of the spare bed and looking into a video screen, it's really nice to be able to meet up and have a beer and properly renew old acquaintances. So I think it's just that fundamental human need that people like to be around people, and good things happen when that happens. So it's just a delight to be here and to see friends, and also to see all the innovations that are taking place in this industry.
And for those that couldn't make it, we do have this going out online later on so that people can listen to our panelists. I'd like to thank our panelists, Ricardo, Phil, and Chris. Give them a round of applause, folks. I've been Peter Haddock. Hope you've enjoyed the panel, and enjoy the rest of your bauma. It's still got a long way to go. Thanks very much.